Stock market trading, level 1. Trading preparation and sectors. Trading preparation and sectors. Trading preparation. There is really no true preparation for the trading room. It's like the big show once you get called up. Either you're ready or you're not. Either you have practiced enough or you haven't. So the key here is to have some practice under your belt prior to entering the trading room and know what you're doing. Once you have traded enough by yourself and you've come to that point in your career that you decide to try a trading room, either at home or out in the real world, here are a few helpful tips to keep in mind. Entering the trading room. There are many trading rooms to choose from: private sectors, banking sectors, online sectors, and the show, the New York Stock Exchange itself. Whatever sector you choose, let's say online trading, that's where many day traders start. Some key advice and reality checks should be put in place if you're going to make it in a trading room. Leave emotions at the door. Trading stocks is not a place for emotions. Control those emotions when live trade making. If you have past training baggage, don't bring it into the trading room. If you trade Monday to Friday, join a trading room or become part of a trading room that is open Monday to Friday, from opening bell to closing bell. If seeking a trading room on your own, look for one that offers you a free trial membership at least for a week. Never spend more than $100 a month for a membership without some ending date. If you're seeking to develop a trading strategy within a trading room, accept the necessary time it takes to study the strategy, absorb the manual, watch the videos, and write your own trading plan. Concentrate on the method. Live it. Breathe it. Watch the mentor's method and learn to respond to your system versus purely clicking when the mentor clicks. You will lose money in the market. Don't blame it on the market. Don't blame it on the room. Don't blame it on the mentor or organizer of the room. You push the button. You will make money in the market. Don't blame it on the room. Don't blame it on the mentor or organizer of the room. You push the button. You will find that you are not compatible with every room and vice versa. You need to be capable of walking away and finding a room that does work for you. Screen for stocks. Choosing the right stocks to invest in isn't easy when there are literally thousands of companies, and huge chunks of data to try to get through is impossible. It's difficult to separate out the helpful information from insignificant information. Therefore, stock screeners have been developed. Stock screeners help traders focus on which stocks meet their standards and meet the qualifications of their strategies. Stock screeners are useful filters that give you a more specific look at the companies you are investing in by first looking at their financial criteria. Some helpful sites to turn to when first selecting stocks are Yahoo Finance, Google Finance, CNBC, etc. Check for market data releases. The best way to stay on top of ever-changing stock market is to watch the news for important events and releases that will affect the market. Any major world catastrophe, even weather events, can drastically affect the way stocks fluctuate. If you want to trade using these events, make sure to follow websites that keeps an up-to-date watch on the economic calendar. Determining quantities for trading or investment. Determining how much stock you want to trade or invest in depends on many variables. How much capital is allocated to each trade? How much risk are you willing to risk? How volatile is the stock? What is the calculating margin? Preparing for your day. Your first day as a trader is going to be a nervous one, so go ahead and prepare for the butterflies. If you didn't have them, I'd be worried. Review what you've learned and know. Once you push the button, you're going to win or lose. The end. But to help you win, set in place your strategy and what you've learned. Doing your homework. By now, you should have chosen 5 to 10 stocks that you are watching and ready with, at least some of them to take that first jump and risk with. Let's look over some material with you and your chosen stocks. Using analyst reports. Wall Street hires an army of stock analysts who spend every day analyzing companies, distributing earnings advice, and providing buy and sell recommendations on those companies. If you want to be like them, you can review analysts' reports all day at their websites. However, if this is your long game, your goal should be to become your own analysis. An analyst's aim is to investigate in the financial affairs of the companies on their list. To cross-check the facts, analysts also delve into the dealings of a company's suppliers, customers, and competitors. Before making any investments, you should do your own research. It is always better to research several stocks in the same industry so that you have a comparative analysis. Managing your watch list. Keep 2 separate lists. Have a close to buying list and have a radar list, which is a list that has stocks that might have interesting products, potential earnings, but they're not quite in the close to buying list. Set a maximum number of stocks you're able to maintain in each list. You may be able to watch 10 in the close to buying and 20 in the radar, but remember, you're trying to manage your lists. You can't add 1 without getting rid of 1. So set reasonable, livable numbers. Regularly manage and update your lists. Assets that are in the news. Always pay attention to the financial news. The Dow Jones will announce any asset management or breaking financial news that you need to be made aware of. Your best line of offense in trading is a good line of offense. Knowing things ahead of time before they happen, staying informed. Mergers and acquisitions. When 2 companies join each other or one buys out another, it means a huge economical shift in the financial world and in the stock world. Having this kind of knowledge and buying in the right stocks at the right time would make people very rich. That's why insider trading gets out of control, because information gets leaked prior to knowledge becoming public. However, if you're a perceptive individual and pick up on a link between the 2 companies when no one else did, you could be a wealthy individual. Intraday search for assets. Intraday values update every 15 seconds and closely approximate the net asset value of the shares of the stock. By watching values, you can determine if this is a stock you want to add to one of your watch lists. Stock scanners and screening. If you choose to be a stay-at-home day trader, or even if you join a trading room, download a free version or invest in a stock screener for helping evaluate your stocks. Using user-defined metrics, your stock screener will filter out stocks for you to help you choose which one fits your profile. ETFs. Introduced in 1993, very liquid, diversify risk. A stock ETF or exchange-traded fund is a holding that tracks an individual collection of equities. It trades the same as a normal stock would on the exchange, but contrasting a mutual fund, prices change throughout the day rather than at market close. Major ETFs are SPY, QQQ, DIA, XLE, EWJ, IWM, and EFA. Several traders like to start off trading with ETFs. They're good starter trades. Indices by geography. First of all, indices is the plural for index. Index trading is trading a portfolio of stocks that represent a specific market. There are several companies that watch the country's international business, which make up the majority of our geography indices. If people are going to buy and sell in and out of other countries, they need to have all the information from reports and analysis to make that decision, and only geographical indices will show that. Indices by sector. The market sector indices page of the Nasdaq report summarizes the performance of certain stocks that are grouped together by a common market sector. Indices by market capitalization. There are 60 major stock exchanges that make up most of the world's wealth. These 60 companies, when measured, is called the market capitalization, which is measured and followed through these indices.